ourselves on 2021 and our fuel and energy update. And as was suggested, Harry Cooney is with us this evening via the magic of the internet.
Are you with us, Harry?
I am.
We can hear you. Over to you, sir.
Well, good evening and welcome. It's kind of a different way to do this, but we've done several of these and they work out great. So I hope you can hear me, and we got a great presentation here. I only have about 10 slides here for you. Some exciting things going on in the energy markets. Of course, it's been a dynamic year in the markets, and it just continues to be. Again, our picture here that we have on the first slide is just our team that just focuses on energy markets only. And I'm in the center there, and I got a fantastic team of 4 that surrounds me and does a great job for all the FS member cooperatives and you, the end users. So I commend them for the great job they've done this year, steering through all these wild markets out there. On to the next slide. Here's just a few items that I'm seeing, and the COVID and its effects. I mean, it had a big impact earlier in the year, and then really after about Memorial Day, the markets died out. They just sat there. They didn't move almost all summer, didn't move much at all. Now they're starting to firm up a little bit. Now the markets are firming up, not just in liquid fuel, but a little bit in propane also. The markets are coming to life here. What about demand destruction, and will it rebuild? I got several slides here tonight talking about demand. I only got about 10 or 11 slides total, though. So, but I'm going to talk about demand. The outside markets, some exciting things here with the outside markets that's going on also. I'll talk about that. The election and results, well, I guess it looks like we have a president-elect. Overall, I don't think it's had that big of an impact on the energy markets overall. I think really the virus talk and the demand has been a big deal. Now, each year I look at contract values at this time of the year. And before I get done doing my presentation here, which is only about 10 minutes, we'll get into a slide that's probably the most important slide that I feel that I can show you of all my slides. But we'll go on to the next slide here. Here's a chart of the stock market. When I was getting out of high school back in, I think, 1980, I probably just should have bought a whole bunch of stocks, you see, but I didn't. Look at that uptrend we've had, and it just continues. The overall economy, even though there's areas of it that's, it really is hard for a lot of small businesses in that. Overall, the stock market has kind of been on its own, just kind of coming back to life. Now, remember this slide here, and then we're going to go on to the next slide. It's the same market. It's still the stock market. But look at, if you just change the scale on the chart, it doesn't look like we're in that big of a rally at all. If you look at this chart, you could say, well, golly, that market's been pretty quiet. So you have to remember, put everything in perspective. It just helps show, even if you look at a market, you can kind of put it in a different perspective by just changing a scale or something like that. So on to the next slide. Here is the total diesel stocks in the U.S. And they're not too bad. They're right in the middle of the historical range when you look at the overall stocks in the U.S. Now on to the next slide. Oh, look at here. We're down near the lows that we've seen in many past years, 24 million barrels we bottomed out at. This is just the Midwest. So after starting the season real strong, demand really pulled stocks down. And, even when you look at some of the railroad numbers, some of the railroad numbers are real strong. When you look at the intermodal demand for diesel fuel, that's where you see the trains going down the tracks with the semis on the cars. A lot of times it'll be double stacked and things. That business is growing strong. The grain trade on rail, grain's been doing real strong. Even passenger cars have come back tremendously, and I think they're now back above year-ago levels. The one area that's still pretty weak on the rails is coal. Coal has just not come back to near the extent. The over-the-road trucking industry, it has held pretty strong this year. I mean, there's been ebbs and flows each month, but overall it's been holding pretty strong there. Now I'll go on to the next slide. Here's the refinery operations. This is one reason why Midwest stocks have come down as far as they have. A lot of it is the demand, but part of it is the production. The refinery profitabilities have not been real strong here in the last few months. And so normally we'd be up at around 90 to 95% here in the U.S. And lately they've been more in the 75 to 80% range. Now, that's the job of the market is to get enough profitability back into the refinery market, and then the refineries will come back to life. Also, I think the refineries are watching the demand side to really see, are we really on that big road to recovery, or have we just seen an early spurt in product demand here? So, on to the next slide. Here's total propane demand in the U.S. So this takes into account gasoline, diesel fuel, jet fuel, propane. So most all your major demand, you can see the big hit that it took from 21 million barrels a day all the way down to on the low there, around 14 million. It's back up to around 19 million here now. So overall, demand has recovered quite a bit. And I think most areas has come back quite a bit. I think even gasoline demand has come back close to normal levels, but it isn't quite at normal levels here as of yet. On to the next slide. Here, I talked a little bit about the outside markets. Here's one market to watch real closely. We've always said this, that the dollar is very important, but look at this chart. The dollar has been selling off since about mid-year. This is very important because as the dollar goes down, it tends to be bullish for commodities. This is one reason why right here now in the seasonal time of the year for weakness in the energy markets, we haven't seen much weakness. We've actually seen some strength. The dollar has continued to weaken, and if the dollar continues to weaken, again, it will be supportive for commodities, those that we need to buy, but also it can help support those that we have to sell. You know, my brother on the farm talks to me about the bean market once in a while, you know, and yeah, lo and behold, I couldn't imagine that we're up almost at $12 a bushel there, you see. So he's actually crazy enough to actually have some beans from last year, so that's a whole long story. I won't get into that. But on to the next slide. Here's the lead month heating oil futures, and as you can see, the market has rallied here just since about November 1st, come up about 25 or 30 cents, but still well below the levels from most of last year. And so we've come up quite a ways, but still not up to last year's levels. On to the next slide. I think I showed this slide last year, and if I didn't, shame on me.
Hey, Harry.
But yes.
Hey, when you say heating oil, what do you mean by heating oil?
Heating oil futures would be the proxy for diesel fuel. So when we talk about heating oil futures are the contract that's traded in New York that is the proxy what's used for diesel fuel. So it can be used actually for home heating oil, but the majority of it's the over-the-road trucking industry. But the futures contract is heating oil. Good question. So we look at this to try to give a gauge long-term as to how good of a buy. If you were going to contract fuel, how good of a buy is it? I think I said last year when I was at these meetings that it was a good buy, and it really was. Now, what I failed to be able to predict was that there was a pandemic coming along, and well, I did miss that one. But overall, you look at this red dot on the far right side, that's where the November heating oil futures contract is now. That would be the proxy for for fall and some late summer diesel fuel. And why I'm concentrating on that is that in our office, we don't see as much risk on the upside for spring product as much. But when you get beyond about July, we think that things can get ramping up in the economy. And so that's why we're really concentrating on looking at contract values for the last half of 2021. And look at these values. Sure, we're 40 cents off the low. But look at many other years at this time of the year, those red dots, and we're almost still at one of the lowest times in the last 10 years. So still great contracting values, great values to be had out there. And I sure wouldn't talk any end user away from doing some contracting. If they've ever had any time or any thoughts of contracting, man, when something's at a 10-year low almost, that seems like a pretty good time to do it, you see. So I wanted to show this chart. To me, that's the most important chart of any chart that we have here. We'll go on to the next slide. Again, closing thoughts. COVID and its effect, yeah, it had a big effect, and now we're just trying to figure out how things pop back, how fast they pop back, and how soon this recovery emerges, meaning that, you know, we're getting some of these shots out, but this is going to be a slower process, it seems like, than what some think it will be. The demand destruction, will it rebuild? It's already started to rebuild. Yeah, it's rebuilding, but there's going to be spurts to this also. The outside markets are making a move. They're actually going down, though, the dollar. Now, the dollar in the near term has gotten pretty oversold, so at some point in here, and it might be into January, I expect the dollar, though, to give a rebound bounce, at least a corrective bounce up, which may allow some of these markets